The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network.
Hi everyone, this is Troy again. Welcome to Let's Talk Money 2020. A lot has happened over the last week when it comes to the stimulus, when it comes to Corona, but I want to get into some of the details on what actually transpired this past week. First, as we know, that the Senate actually approved the new stimulus package for individuals and businesses on Wednesday, and just before this filming, the House approved the same measure. So I want to get into it just a little bit. First, the name. I'm going to give you the official name. The Coronavirus Act Relief and Economic Security is I guess is CARES, CARES. But as we all know, we've been looking at the news all week. It calls for $1,200 per individual and $500 per child. And it's going to be based on your 2018 and 2019 tax return. The way that works is if you've already filed your 2019 tax return, they will go on your family composition on your 2019 tax return. If you have not filed the 2019 tax return, they will look at your 2018 tax return, which brings about several questions. The main question is how you going to get the money, right? It's going to be a tax rebate. So what they're going to do is they're going to look at your actual bank account on your last tax return and give you a direct deposit if you had a bank account listed there. And if you did not have a bank account listed there, it would be a normal IRS check. So that answers that question, how are you going to get it? I made a joke just a few days ago. What if the IRS had a big cash app and just cash app folks? But I guess that would be too simple. Now there's been some other changes when it comes to this new bill. A lot of things were wrapped into it. I'm going to try to cover the basic items, and next week I'll get into more details on some of the other items. But one of the things that really happened during this whole coronavirus was that people started flocking to the unemployment agencies, and the unemployment numbers have grown significantly because a lot of people are out of work. Their place of business might have shut down for this period. You might have had what happened here in Maryland, where the governor shut down all 9 essential businesses. So a lot of folks are without steady employment right now. So of course, more people are going to file unemployment. But as part of this Relief Act, the government is going to step in. The federal government is going to step in and increase the unemployment claims by $600 per month, up to 4 months. And this is just new stuff, so you're going to find me just looking at my screen quite a bit because this is all new and I really have not memorized all this. One other change, this is going to be a really good change, and I'm going to tell you why a little bit later, is because the people who are self-employed, independent contractors, people who had limited work history will be included. So you're going to see the significance of this a little bit later when I talk about some of the business changes. One other thing is there are no more waiting periods at the state level. The federal government is going to step in and help these states with their unemployment rolls and make sure that people get their monies faster. And after your state unemployment runs out, the federal government is going to kick in again and actually provide assistance for the next 13 weeks up until December 31st, 2020. So that's the unemployment piece. Okay, so if you qualify for the full amount, well, if you don't qualify for the full amount in 2020, you can get the remaining in 2021. So, of course, there are certain stipulations on whether you can get unemployment, and if you cannot get the full unemployment in 20, you can actually get it in 2021. And I'll get more into detail in that on the next show. Okay, so this is going to really present some challenges. If the government owes if a person owes the government money, that's going to present a challenge. And I also already told you about the challenge that people will face if they were not employed with a W-2. That challenge has been overcome by allowing independent contractors a way to actually get paid as well. Now, with this $1,200, if you owe taxes on the prior year, the question is, how do you get your money, or if you will get your money? And to be honest with you, this came up because a client called me last night, and he said, this is all nice, but what if I do not actually, what if I actually owe for prior years? Do I get that money? And I'm assuming that he really needs the money. And my first answer would be, you probably would not get the money, because if you look at it as a tax rebate, they're going to look at what your balances are, and if you owe, be basically like any other tax rebate or tax credit, you would not get that money. They would actually take their money. So it brings on an interesting question, because if the stimulus package is a $2 trillion package, I think that really it's not truly a $2 trillion package. It's going to be a net amount after folks who owe money right now, and unfortunately, a lot of people owe money to the federal government. So, would they actually get their money, or what if they owed a large state balance, and then there's a state intercept? So, to be honest with you, I don't know the definitive answer there, but I would think that you would not get the money. And what my client did was he called around. He called his congressman today. They didn't have the answer for him. So I'm hoping that he urged them to really go before Congress and really hammer out this issue. He also called the radio stations, and most of the radio stations did not know as well. So hopefully this will be a question that will be addressed either tonight or in the coming days or weeks ahead. From my understanding, the things that I've been reading, it sounds like it may even be a few more weeks before the government even starts to issue out these checks. Again, this is all opinionated, not my opinion, but some of the things I've been reading. I read earlier in the week that if there was a bill passage, which there was a bill passage, the checks won't necessarily go out until the third week of April. I even heard some reports saying that they might even issue the checks in May. So that kind of thing is really going to be hammered out, and I'll keep you posted as we proceed from week to week. Okay, so the next thing is businesses. So I think we've covered most of the high level areas on the individuals. There may be one or two things that maybe affect the average taxpayer. Like, for example, I believe in the House, the Senate version, there was a provision in there that will allow you to do charitable contributions if you did not itemize, because as we all know, if you don't itemize, you can't get your charitable contributions on the individual return. But I believe the Senate version has a provision that they will allow you to do a charitable contribution without itemizing up to $300. And if you really think about this, over the last few weeks, churches, synagogues, mosques, they weren't allowed to actually congregate. So you gotta really figure that a lot of these places may be really feeling the pinch of the not being able to hold services and that sort of thing. So I guess to really stimulate and to encourage people to continue giving, I guess this provision was really placed in there to really help out nonprofits, and other non-religious nonprofits are probably hurting as well, because I guess their donations would be down. If people are out of work, they're going to get less and less donations. So that's a great way to segue into the business changes. So There have been certain things proposed and actually approved at the federal level and the state level. I'm going to first talk about the federal level because that was the bill that was just passed, and I'll go into some of the state remedies as well. So on the federal level, there is a 50% refundable payroll tax credit up to $10,000 in wages. So the first $10,000 in wages, the payroll tax credit can apply to some of the payroll taxes that an employer pays. So this won't be a reduction in the withholding, but it'd be a reduction in the amount that the employer pays. The Social Security, this is a big one. The Social Security taxes that the employer pays, not the employee, but the employer pays, he or she can actually defer the actual Social Security payments to up to 2 years. So the way it will work is 50% of the Social Security taxes that are due this year will come due in 2021, and then the other 50% will become due in 2022. This sounds like a real good thing to really defer those payroll taxes. However, if you're not prudent with the money, and you spend the money, then you're going to get behind when your 50% payments become due. So you got to be really, very careful about that one, even though you're going to have 2 years to actually make those payments. And then you get the 50% credit as well, so that's going to help you out. Companies that have NOLs, like your corporations that have been profitable in the past and you pay taxes in the past, typically you can do a carry forward on a loss. So if you were profitable up until say 2019, and then 2020 you started to experience losses, you can carry forward those losses into the future. But now with this new provision, you're going to be able to go back 5 years. So if you were profitable in the past, you can, and you pay taxes, you can get refunds up to 5 years of the taxes that you've paid, up to the amount that you actually lost in 2020 and beyond. There's also going to be some changes when it comes to interest deductions. They're going to be allowed to actually deduct more in interest, and you won't be subject to the 30% interest limitation. So that's for people who actually have high interest deductions on their corporate tax filings. So here's another item that is really going to be, I guess, good for certain businesses. The SBA is going to approve up to $10 million for business loans. And then there will be a loan forgiveness component and built in there as well. So over the next 8 weeks, that is, if you have payroll costs, rent costs, utilities, you're going to be able to forgive some of the loans that you actually have taken out with the SBA loans up to the point in which you had payroll costs for the next 8 weeks. So, I mean, that's a pretty good provision if you have W-2 wage earners. But the point is, the thing here is you have to keep those employees. Once you get the loans, you have to keep those employees on the payroll records to actually get the loan forgiveness. So this is a new component that's actually built into these provisions, in that if you were to actually take out one of these loans, you can actually be forgiven the debt if you keep the employees on your payroll records. So the next thing, I'm just talking federal now. And again, I'm talking the federal provisions. The loans will be over a 10-year period, low interest. The last thing I heard was the interest rates could be no more than 4%. No personal guarantees, and I think it's going to be probably easier for people who have challenged credit. And I already said that the interest cannot exceed 4%, and the interest payments will be deferred over 1 year. Okay, qualifications. These are people who, these are for businesses that have less than 500 employees, and there will be a size test. So if your business is over a certain size, you will not be eligible for this particular provision that I'm talking about. Next thing is the amount. Now here's where it gets kind of tricky. The maximum amount of your loan can either be $10 million or 2.5% of your average monthly payroll, and this is over a 10-year period. So your loan is going to be over a 10-year period, or up to a 10-year period. So let me just tell you how that works out. If your average monthly payroll over the last year was, say, $20,000, right? You can take you can multiply that by 2.5, and that would be the maximum amount in this case of your loan. So if you because obviously you don't have over $10 million. If your loan is for $20,000, you multiply that by 2.5, that will give you a $50,000 loan. So the moral of the story is, the larger your payroll is, the higher your loan. I think we got a call, but I'm in the middle of a presentation here. Let's see if I can get back to the caller. So really the moral of the story is, the higher your payroll, the greater your loan. And that's going to present a problem, as I mentioned before, for people who don't necessarily have employees. Let me just give you some examples, because I got these kind of calls all week. What if you're a hair salon, right? And you don't have necessarily employees, you have independent contractors that are really, they have their own clientele. Well, that's going to present a problem, because when you go to really apply for these loans, they're going to ask you to submit W-2 payroll records, and you're not going to have those W-2 payroll records. So I'm really thinking that this probably will not apply to anyone who does not have employees, and this is kind of where the law gets kind of prohibitive. Now, like I said before, the next option would be the unemployment provision, because, like I said before, if you're self-employed, then you will be included into who can get unemployment checks. So, unfortunately, if you don't have the employees, I don't think you're gonna be able to actually take advantage of these business loans or grants or whatever it is, because they're gonna ask for payroll records. So, and these payroll records, they're gonna have a look back period for 1 year. So it's not like you can start getting on payroll and then start qualifying for some of these federal provisions. All right, so let's talk about some of the state programs. The one that I know of the most is the Maryland programs that they came out with before this package was even signed today. In the Maryland package, it was basically, there were a lot of different provisions, but there were basically two major provisions that really affect people, these businesses that were shut down or slowed business because of the coronavirus. There was a $10,000 grant, and the other one was the $50,000 up to $50,000 loan. Now, these $50,000 loans in the state of Maryland, I don't know about every state, but obviously I live in Maryland, and most of our clients are in Maryland. But I'm pretty sure that most of the states that if they do have these stimulus programs in the states, they're going to be pretty similar. I believe the maximum interest rate on these loans was 2%. And let's see if I remember the Maryland one correctly. You can defer your payments up to a year, and then you have 36 months after that 12-month deferment period to actually pay off the rest of the loan, which is a pretty good package. So basically, you're going to have 4 years. You're going to have 4 years to actually pay it back. The first year you won't have to make. I believe you won't have to make any payments in that first year, and then after that first year, you have to make your payments over a 36-month period. And again, the amount of the loan is going to be up to $50,000. But here's the kicker. Again, you got to have employees. Now, this came up because several clients have called me this week that we're trying to actually get them approved for some of these relief packages. And two of them actually were they own hair salons. So it's going to be very difficult for them because they don't have W-2 employees. So I don't know. What I told them was, hey, look, apply anyway. Try to explain in your documentation that you were shut down by the state of Maryland, right? So you do have economic hardship, and that's not hard to prove because the state of Maryland had basically closed your business. Um, and then you try to really explain to them why you don't have employees. I just wouldn't give up on it, because this provision could help people who don't necessarily have employees, and I don't see the reason why they should be excluded just because you don't have employees. That's just the nature of some businesses. They just don't have W-2 employees. So I would encourage my clients here to actually apply anyway if you don't have the employees for these state programs. It's going to be kind of hard to get over the federal the federal hurdle because of the 1 year look back, right? But for the states, I think you can probably just explain why you don't have it, don't have the employees. So again, I'll keep you abreast any developments in this area. But again, I hate to keep hammering over this, but if your state is on some kind of state lockdown where businesses are not open, well, the key thing to really prove that you deserve these loans are if you are experiencing economic hardship, and just by the virtue of you're not being able to open up your business, I think that would automatically imply that you are experiencing hardship. So again, we'll be completing several apps for clients this coming week to try to do both the state provisions and the federal provisions. Now, one thing I can tell you is the feedback that I have been getting so far, because we've already kind of went ahead of things. The feedback that I'm getting from most of our clients that have tried this is the application process in the state level. We haven't tried the federal because obviously it was just approved today. The process is pretty lengthy, so it's not like this is a 15-minute exercise. When you go to the loan, some of the websites that really administer these Maryland loans, they tell you that it's going to take you at least an hour to actually fill out the application. Now, some of the things that you're going to need is you're going to need, of course, tax returns. You're going to need payroll records. You're going to need unemployment numbers. They want you to prove that you actually had employees on your payroll. You're going to need financial statements. Now, one thing, if you keep watching our show, the last several weeks, I've really showed you how to really produce your own financial statement. I realized that a lot of our clients come to us to actually do financial statements, but you can probably do your own financial statements. But we're always here to help you out and do your own financial statement. But we're going to take a break, and what I'll do is I'll come back and I'll show you once again how to do the quick P&L. And you can go to other broadcasts to get the same thing. I think on the other broadcasts you couldn't really see the screen too well, so we're gonna play with different ways that you can actually see the screen. So let's do this. Let's take a break, and then we'll come back and I'll go over real quickly how to actually produce a quick P&L. Okay, we're back. So as promised, what I'm going to do is I'm going to show you how to do a quick P&L, because a lot of these programs you're going to need financial statements. So, some of you might be ready to do a P&L yourself, or you can just call us and we can actually produce that for you. So look, the first thing you got to do is you got to go to your bank and get copies of your Excel versions of your bank statements, right? And what it basically going to do is it's going to give you the date. It's going to give you the amount of each transaction. It's going to give you a date, amount, and the description. So what I did was I kind of done this. I kind of put a file together to kind of quickly show you. And I've done this on other broadcasts, but I think it's worth it to actually go over this again. So basically, you're going to have all your transactions for the year in one file, right? Just add them together, just add them to the same file. And then what I do is here, I put a month column here, all right? I'm doing this because I want to be able to separate how I'm doing per month if I need it, right? Sometimes you don't need it, but if you want to see how you're doing each month, it's definitely worth it. All right, so, and then the other category that I'm putting in here, I'm putting an actual column here called category, and I'm actually defining what this stuff is. So this is all income here, and if I scroll down a little bit more, I have advertising, I have bank fees, I have business services, whatever you want to come up with. Just be consistent, right? So that's a category. That's a column that you're going to have to add. And then what you're going to have to do is you're going to have to add, well, if I were you, I would just add where it comes from, like Bank of America account number 2233 for the last 4 digits of the bank account number. So so basically what you do is just highlight it all right here, and then you just go down all the way down to the bottom. You can use a mouse. You can actually use some fast keys to get you down all the way at the bottom, like I do most of the time. I'm just doing it real slow so you'll get the hang of it. You just highlight it all. You go here to insert pivot table. Hopefully you can see this time. If not, we'll keep playing with it until we actually can get you to see it real clearly. No big deal. So we hit OK. It's going to take you to this screen right here. It looks a little weird, but it's really easy to figure out. So you're going to click on category. Most of the time it's going to put things right here, nice and pretty for you. Nice categories right here. And then what you're going to do is you're going to take the amount and you're going to drag that amount under values here. Voila, you got an income statement. It's just that simple. A P&L, income statement, whatever you want to call it. Just remember that for that income, for whenever you do a category of income, I usually put one income. Therefore, my income line always comes up first. That's the reason why I put one income. Just in case you're wondering. All right. So now let me show you why I put the months on the spreadsheet. So if I go here to months and I drag that under the column field, it actually breaks out everything by month, so you can see how you were doing per month. Not bad, huh? That's basically it. It's just that simple. And what I'll do is in coming weeks, I'll go over this over and over, because you might have to put together a quick P&L to either apply for one of these programs, apply for the bank, or you just might need a P&L for something else, a grant or something like this. Look, it's really simple. We do basically the same thing at the office for you when we actually do your P&Ls and you need a quick P&L. We do it at the office all the time. We use the same process. It's just we might get a little fancy with it. We might put it in a nice pretty template with a nice wording and all that kind of stuff. But the basics, this is it right here. So that's it for this week. What I'm going to do is I'm going to make sure I stay abreast of what's happening day to day, because things are changing day to day. One of the changes that happened last week, from last week to this week, is remember last week they extended the deadline to July 15th when it comes to the filing. But I'm sorry, first they said just to pay your taxes, but now they extended the deadline for paying and filing to July 15th. So that happened over the last week. So things are moving rapidly. I'll try to keep you abreast. And if I can do some videos during the week, I'll shoot out those during the week as well. But thanks for tuning in, and I'll see you next time. Stay safe. Take care. Okay, guys, I think we're done.